G'day and welcome to Morgans Edward Street Weekly Wrap for the week ending Friday 13th of July 2018. This week I'm lucky enough to have our star resident analyst Nick Harris next to me, who will speak to us shortly about one of the core stocks held widely across mum and dad portfolios. Before we begin, let's recap on the markets overnight, with the Dow Jones closing up 225 points to 24,925, and our market looks set to follow today with another positive day expected to be up around 10 points. As always, please note that the following comments in this video are general in nature, and please speak to your Edward Street advisor if you wish to know if any of the stock recommendations suit your personal needs and objectives. Now, thanks Nick for joining me this morning. One stock that is widely held in our office and across the Morgans network is of course Telstra. And similar to Manly, you either love or hate them. And plenty of analysts cover the stock with varying views, but you have stuck to your guns with a buy in the stock and a price target of around $3.42 against a share price yesterday of about $2.75. Every day we field a lot of calls about Telstra's future, so today I thought I'd take the initiative and put you under the spotlight to answer a few of the questions on everyone's mind regarding the future of the stock. First of all is the dividend. Most clients that hold them in their super fund would like to know if you think management will stick to the 11 cents twice a year or lower the dividend in favour of growth.
Well, thanks, Matt, for your time today. Look, the dividend's always a hard one with Telstra. To be honest, I think we're looking at the prospect of the dividend being held at the 22 cents this year, but coming down after that. I guess the problem we've had with Telstra is there's an awful lot of moving parts. At the end of the day, you've got an underlying earnings and a recurring earnings, which is the base of the business, and then these one-offs as well. So what Telstra's doing now is taking the hits effectively and setting up the business for the future, which I think does put a question mark over the dividend staying at 22 cents. In fact, we've reduced it to 17 cents. In FY19 in our forecast, so we're certainly not betting on it now, unfortunately.
Okay, good one. You've been quite vocal about the NBN being a white elephant. Do you have any guide as to when you think the government is likely to write down the cost of NBN and therefore likely benefiting Telstra?
It's a good question, Matt, and a hard one to answer as well. Look, I think there's a couple of possible scenarios here. Number one is, my view is that the NBN is entirely political. It was invented to buy votes, which caused governments to change, Kevin Rudd and the Labor Party to get in. The Coalition decided they needed something similar to get back in, and they came up with their own version. So two examples of the NBN being political. So politically, you may choose to write it down ahead of an election in order to buy votes. So that's the optimistic view, is perhaps in the next 12 months we see it being written down. The more pessimistic view is at the end of the NBN rollout, which is basically 2023, will be when we'll know for sure the take-up of it, so the number of customers using it and how much they're paying the NBN per household. And my view is that'll clearly be a lot lower than they expect. So worst case scenario, we've got to wait till 2023 when the hard facts are irrefutable. A couple of things we can point to now, though. If you look, the NBN has actually lowered their last mile access prices. So they've said, we want to charge $52 per connection per month. At the moment, it's $42. So if it stays at the $42, that wipes nearly $1 billion off the NBN's revenue per annum. It's a company that they claim will make $2.2 billion of EBITDA. If you take $1 billion off that, that's clearly half the earnings you're expecting. So it's not hard to see that it doesn't take a lot to to make this company not make the profit that's expected.
Good one, you clearly know your numbers there. Telstra's been met with a wave of selling last financial year, mainly due to low growth and high competition. Is the 5G rollout their best bet for future growth, or are there other options you think can lead the way forward with growth?
I certainly think 5G is a big one there, and certainly one of the more interesting things Telstra said at their Invest Today recently was they're going to lead the charge on 5G. So I think it is certainly going to be a growth avenue. I guess it depends how you cut and dice it. I think you'll see a lot of new things, like clearly everyone talks about driverless cars and driverless drones and things like that. So that's an area where you'll see actual revenue growth. But I think at the end of the day, with mobile phones in particular, consumers are not likely to pay a lot more to get a 5G service. They'll just get more data for the same price effectively. So So I don't think you'll see consumer revenue increase dramatically, but I do think you'll see other avenues coming, more and more connected devices, and particularly things like the drones and cars. Clearly, it's time critical. Can't afford to have a network that drops out. Imagine you're driving your drone and the network drops out, crashes into a building, and either you break it or someone dies or whatever the outcome. It's not a good one. So I think Telstra's certainly got an advantage there when it comes to time critical applications, and particularly 5G is one of the most significant ones. The latency or the response time is multiples faster than 4G. So I do think it is a growth avenue. I do think people also forget, though, that Telstra has some other growth avenues, in particular the submarine cable networks around Asia. They've actually got the largest or second largest submarine cable network in Asia. Clearly, Asia's the growing economy and likely to overtake the US in the not too distant future, and data is a big part of that. So I do think you'll get some growth coming through from areas of their business like NAS, or network applications and services, which is submarine cables, data centres, etc. around Asia. But I also think the investment view for Telstra is not really necessarily around this company having strong earnings growth, because it's never really had earnings growth, if we're honest about it. But it's more about the multiple or the stock price re-rating when people get a bit more comfort around it.
Good one. Okay, looks like I need to go and buy a drone. Finally, if you're holding Telstra shares at the moment, and you've paid higher prices for them, and thinking of buying more, do you think we're at the bottom of the cycle right here, or should we wait a bit longer before diving in?
Look, I think I dove in too early on this stock, so the timing is clearly a very difficult thing to predict, but I do think we're very close to the bottom now. If you look at the Investor Day, objectively, you can see that when they held this Investor Day, they actually downgraded their earnings expectations by about 15%, so a big number. Yet, minus a little bit of volatility over that week, the share price has pretty much held steady since then. So I think that this is the bottom, because everyone's got the view that the FY19 guidance that they've provided is a kitchen sinking event. One such example is they're effectively assuming the growth of the NBN, or the number of customers moving onto the NBN, doesn't change in FY19 versus FY18, whereas the NBN are almost assuming a doubling of customer numbers. Now, clearly the NBN's failed to meet almost all of their targets, so I wouldn't be betting on them hitting their target, but it is fair to say Telstra's fairly aggressively cut their expectations there. So I do think that we've seen the last of the earnings per share downgrades from Telstra. I do think they've got a strategy which is a reasonable strategy to fix the business, turn it around, and we've got some stuff to look forward to. So I think we're at the bottom here.
Good one. Well, thanks, Nick. Really appreciate your thoughts on Telstra, and, well, at least for my client's sake, I hope you're right about it being the bottom. Anyway, so thank you for coming on board and talking about Telstra today. So for clients that participated in the recent Viva Energy IPO, this stock will list on the market today at 12 o'clock under the code VEA, after setting the book build price at the lower end being $2.50. Well, that's it for another week. We'll see you all again next time. Have a great weekend.